Have you noticed how Bitcoin seems to jump when everyone least expects it? Today I'm breaking down, in plain language, why Bitcoin is exploding, what's driving the surge, and how to think clearly in the hype. Let's cut through the noise, and look at supply, demand, adoption, and psychology. By the end, you'll understand the key forces pushing Bitcoin up, the risks that can smack it down, and a simple framework to stay calm when the candles get crazy. Let's start with the most misunderstood part. Fixed supply. There will only ever be 21 million Bitcoin. That cap never changes. When more people want a scarce thing, and supply can't expand, price pressure builds. It's basic economics. Unlike currencies that can be printed, Bitcoin's issuance is programmatic, transparent, and predictable. Next, the halving cycle. About every 4 years, the reward that miners earn for validating blocks gets cut in half. That means less new Bitcoin entering the market every day. If demand stays the same or rises, price often adjusts upward. Halvings also act like a global marketing moment. Media coverage spikes, curiosity grows, and new buyers show up just as new supply shrinks. Third, institutional access. As it becomes easier for larger investors to hold Bitcoin through regulated products and custodians, entirely new pools of capital can enter. Pension funds, asset managers, and corporations don't need a hardware wallet to get exposure. They need compliance, custody, and liquidity. The easier it gets for big money to participate, the more persistent demand can become. Fourth, network effects. Bitcoin is valuable not just because it's scarce, but because many people agree it's valuable and use it as a store of value or settlement asset. More holders, more developers, more exchanges, and more merchant experiments create a stronger network. The stronger the network, the more people trust it. That trust becomes a feedback loop that can lift price over time. Fifth, macro forces. When people worry about inflation, currency weakness, or capital controls, they look for assets that can move across borders and resist dilution. Bitcoin is portable, auditable, and independent of any single government. In times of uncertainty, that set of features becomes more attractive. Sixth, liquidity and reflexivity. Crypto trades 24/7. When price rises, headlines turn bullish. Bullish headlines attract new buyers. New buyers push price higher. That loop, called reflexivity, can accelerate moves in both directions. It's one reason Bitcoin can explode faster than traditional assets. Seventh, on-chain transparency. Unlike most markets, Bitcoin's ledger lets analysts see trends, long-term holders accumulating, coins moving off exchanges into cold storage, miner behavior, and more. When data shows supply getting tighter on exchanges, traders anticipate potential price pressure. Expectations themselves can fuel momentum. Eighth, technology and infrastructure. Improvements in wallets, payment rails, and scaling solutions lower friction for everyday use. When it gets simpler and safer to buy, hold, and send Bitcoin, adoption grows. Adoption, more users, more transactions, supports the long-term story. But let's be real, volatility is the price of admission. The same forces that drive dramatic upside can snap back hard. Leverage in the system can unwind quickly. Sentiment can flip overnight. If you only chase green candles, you may end up buying tops and panic-selling bottoms. So, how do you think clearly when Bitcoin is exploding? First, separate narrative from numbers. Ask, is demand rising from real adoption, new access points, and macro tailwinds, or is it mostly momentum? Narratives matter, but they must be anchored to something measurable. Supply issuance, inflows, adoption metrics, development activity. Second, respect risk. Never invest money you can't afford to see swing. Set a plan before you buy. Decide how you'll add, how you'll trim, and what time frame you care about. If you're thinking in years, don't act like a day trader. If you're trading, don't pretend you're a long-term holder. Third, consider time diversification. Many people use dollar cost averaging, buying small amounts on a schedule to avoid guessing tops and bottoms. It's not flashy, but it can help emotions from running the show. Fourth, prioritize security. If you hold your own coins, learn about hardware wallets, seed phrases, and phishing risks. If you use custodians, evaluate their reputation, audits, and protections. Gains don't matter if your security fails. Fifth, watch the big three signals: liquidity, policy, and positioning. Liquidity are new on-ramps and products bringing in fresh capital. Policy is regulation becoming clearer or murkier. Positioning are long-term holders accumulating or distributing. These don't predict the next hour, but they shape the next chapter. Sixth, Embrace intelligent patience. Bitcoin's history is a series of expansions and contractions. Boom, retrace, build, repeat. Explosions are exciting, but foundations are built in quieter times. Developer work, infrastructure upgrades, education, and better user experiences. Seventh, beware of overconfidence. When price rips, everyone sounds like a genius. That's when risk hides in plain sight. Ask yourself, if price fell 30% from here, would my thesis still make sense? If the answer is no, adjust now, before the market forces you to. Eighth, context matters. If your goal is long-term wealth, think in cycles, not seconds. If your goal is payments, look at fees and reliability. If your goal is diversification, define how Bitcoin fits with real estate, cash, and other assets. Clarity beats excitement. Let's bring it home. Bitcoin is exploding because fixed supply meets rising access and demand, amplified by cycles, macro narratives, and network effects. That recipe can create powerful rallies, but smart investors pair optimism with a plan, discipline, and security. If you found this breakdown helpful, subscribe for more clear, no-nonsense takes on money, real estate, and the economy. And now, I want to hear from you. What's the one question still nagging you about Bitcoin? Drop it below. I read every comment. Explosions make headlines. Discipline builds outcomes. Keep your curiosity high, your risk measured, and your plan boring. That's how you turn volatility into opportunity. Leave a comment so we can keep the conversation going.